All right. You guys hear me? You can see the slide?
Yep.
Yes.
Cool. Let's do it. Let's get right into it. Awesome. Another weekly sync. Thanks for everyone who's come through. Lots of good stuff to chat on today, and it's nice that we're doing this while Bitcoin's pumping and blowing past 25K for the first time in, I don't know, a little while. So, what do we got today? We'll do a macro update real quick, just some market sentiment check. We'll look at some BTC charts as well before then handing it off to Ecam, maybe Swick, and anyone else who wants to go through a TA chart. Macro update, equities by and large are still up pretty nicely. I think S&P is like pretty unchanged. Same for NASDAQ week over week, but so far up this year, up close to 18 and 16% respectively. US dollar index has rallied a little bit off of the start of the year. It's gotten crushed over the past few quarters, so no surprise to see it bounce a little, but still kind of close to flat, only up 70 basis points. Crude oil's actually come down week over week. Last week it was flat. Now it's down for the year 2.3%. Obviously, we want to see that to continue to trend lower. That will help with inflation. Gold is up 75 basis points for the year. And next week, economic data, we'll have FOMC minutes on Wednesday. We'll get some Japan inflation data on Thursday, as well as US personal spending and personal consumption expenditure, or PCE, on Friday. So expecting some comments from the Fed, which I think the market will digest. We'll see if that impacts the market. We'll get a good read through on Japan to see what kind of inflation they're experiencing, and that'll help us get a better sense for kind of like the rest of the world. Because of course, like the US usually leads with something like inflation, or at least in this case, where it's kind of like mass global inflation. And then we'll get some economic data just as far as like how the consumer's doing, what's spending looking like, and that'll obviously be a read through for strength of the economy and potentially even future inflation. Let's switch over to market sentiment. We went over this last week, and this is in all these charts I'll go over next are in the SD Alpha channel, so you can check them out. But market sentiment for traditional finance. This is CNN's Fear and Greed Index, coming out of extreme greed and went down to greed, and now we're bouncing a little bit higher. Maybe we enter extreme greed again. So needless to say, based off of this, animal spirits are starting to look pretty high in equities. But mind you, this is like the first time we've seen this level of excitement in 15 months or so. So yeah, we previously just hit like a new multi-year high on the index. And so while it is kind of a little concerning that sentiment's gotten really good, and we could probably expect it to pull back a little bit, like I don't think that just based off of this, it doesn't seem to me like it's kind of absolutely crazy that sentiment is leaning greed or extreme greed, only because it's for the past 15 months it's been really, really terrible. Somewhat similar kind of setup, but this is the AAII institutional investor sentiment, and I won't go into how it's calculated, but you can take a spread between bullish and bearish sentiment, and it's net bullish right now, and this is actually the first time again in like over the past year. So needless to say, like last year sentiment was terrible. It's starting to flip bullish, looking pretty good. Doesn't necessarily mean we're out of the woodworks and market's gonna rip higher, but there could be kind of like a changing of the guard here, obviously depending on how subsequent inflation data comes out, what the Fed says, things like that. But yeah, right now it's worth noting that we are at a time where bullish sentiment is certainly the highest it's been in a little bit of a while now. So keep that in mind. Don't get sucked into the sentiment, just the bullish sentiment, just like you shouldn't have gotten sucked into the bearish sentiment all of last year. Things, there's ebbs and flows in markets, so it's just all about being patient. Switching over to crypto, this is a crypto fear and greed index. We actually punched up to, and this is actually a 7-day moving average just to smooth out some of the lines, but punched up to greed territory over the past week and have come back down in. We're technically in neutral territory. Again, kind of like very much the same sort of sentiment relative to the TradFi worlds is, things have gotten a little bit greedy as of late. We saw a big run over the past 6 weeks at the start of the year. Things are maybe coming in a little bit, but nonetheless, it's nice to see some greed because we had obviously been in just a massive downtrend for all of the past 15 months, and maybe we see the sentiment kind of like level out again before trending higher. But right now, it is worth noting that the index is setting higher highs and higher lows. So from a technical standpoint, there appears to be a change in trend, but we won't know until we know. Sticking with crypto sentiment, this is the Bitcoin futures funding rate. It is positive, so that means there is a markets leaning bullish. It means longs, perpetual futures, longs are paying shorts, so that funding rate is positive. While it did come in over the past like week or so, we've seen over the past few days it actually pop higher. And yeah, nonetheless, I think that reversal, along with price popping up to 25K, is most certainly indicative of the market leaning bullish at this point in time. We'll have to keep a close eye on how this funding rate changes, but for a lot of last year it was negative, and it's nice to see over the past year or so it's been, or excuse me, so far for the year it's been definitely bullish and positive. So shifting kind of gears over to like what we should be paying attention to on at least on the macro front. We had a whole bunch of economic data come out this week, and we talked about it last week. So on Wednesday we had retail sales come out, and these are actually not necessarily in order, but we had retail sales come out on Wednesday. Just yesterday came in at 3% versus 1.8% expected. So the consumer spending on the retail side was most certainly stronger in January. Seasonally, it's typically a little bit stronger in January, but it did come in notably higher than expectations. And so I think this is, I don't want to say this is necessarily cause for concern, but it's something to obviously keep an eye on. If the retail sales continue to be a lot better than expected, that means spending hasn't really slowed down, and so that could translate to higher inflation. So the market was equities are a little bit weaker on that data yesterday, I believe. We had the producers price index actually report today, so it's another gauge for inflation, but on the manufacturing side, and it, of course, to no surprise, came in notably hotter than expected. 70 basis points or 0.7% versus 40 basis points, hence why the market's trading down today. So definitely a hotter month than expected, but larger, bigger picture, it's still trending lower, which is very much the same for CPI. So we had inflation on Tuesday. That came in at 2.4% versus, excuse me, 6.4% versus 6.2% expected. It was higher than expected, though. The one win is that it's been sequentially down for, I believe, 4 or 5 months straight. So inflation does look to be rolling over. The biggest thing to note about the CPI number was that the biggest explainer or biggest explanation for it being so high and higher than expected was housing. And housing is it lags the hardest of all these rate hikes. Like it takes a long time for an increased interest rate to translate to higher mortgages, to translate to fewer people buying, to more people renting, since they can't sell the house. The rental market starts to get a little bit more of a buyer's market. The inventory just opens up, and so that's just going to take time until the housing market starts to roll over. I did provide this chart here. This is actually the Zillow Home Value Index. This is much better than some of the other indexes out there, like the Case-Shiller Index, which is one that is widely followed. This one's actually pulled directly from the Zillow database and is all Zillow data. So a lot more, I think, reflective of the current state of the market. But as you can see here, it's just started to roll over the past few months. So my 2 cents here is that, yeah, inflation was hotter than expected, housing being the biggest component of it, and it being also the biggest, laggard. It's typically taking the longest amount of time to come in. It does mean that I think in the next few quarters, inflation will continue to come down and we won't continue to see higher than expected levels. But Of course that could change. There's no knowing for sure for certain, but yeah, nonetheless, going to be keeping a close eye on this the Zillow Home Index. Also, all eyes are on the federal funds rate. So we talked about this all the time. This is the federal funds futures probability. So I won't bore you with what it is, but it's basically a market that's pricing expectations for interest rate hikes. So after this most recent inflation data and some of the other data coming out this week, the market is now pricing in three more 25 basis point hikes. And there went from being a 6% chance of 50 basis points in March to a 15% chance. So market is starting to price in, more rates, potentially another 50 basis point, which is an interesting change of tone from the market, but it's not necessarily something that a few other Fed officials haven't talked about. More specifically, and actually this morning, Fed Reserve Bank of Cleveland President Mester, who is she's part of the board, she said that she's open to a 50 basis point hike at the next meeting, which is March 22nd. So, yeah, nonetheless, market now pricing in another 25 basis point hike, but still, just like last week you talked about, expecting a cut in December of this year. Who knows how this changes with time? We'll have to just kind of wait and see, but it'd be nice if inflation comes in better than expected and we go from, digesting a March cut to then come May is the final cut. But we'll have to see. Let's move into some Bitcoin charts. We talked about this one last week, and I'm actually since posting this, Bitcoin's made a nice move. I wonder if it's actually trading above some of these moving averages. But we said that basically Bitcoin flipped above the 20-week EMA and the 21-week simple moving average, which has historically been a useful combination for deciding like where is the trend, longer term trend, and is there kind of like a change in that trend? And so we've been up above both of those for technically what's close to almost 6 weeks now. And now we're testing two really big ones, the 200-week moving average and the 50-week moving average. I think we're above that right now. If we can get a close above that and continue to hold it, like I'll get even more bullish. But of course, like I wouldn't be surprised if, we test both of these, get above it, but get rejected back below it and have to spend some more time kind of like consolidating and eventually turning it to support. But nonetheless, these are moving averages to pay close attention to. And we've been making some good progress over the past few weeks for sure. Here's another one. While we're testing resistance, we're also holding pretty good macro support. So this is the logarithmic regression trend line. The idea here is, I'll try and just put it in simple terms, is that, Bitcoin being a network, it follows like a logarithmic kind of growth, exponential growth. And you can kind of plot these various different support and resistant trend lines that Bitcoin has been respecting in one way or another as continues to become an increasingly massive and robust network. And so I'll zoom in on it, as we can see here, which is really kind of cool. This buy more level, Bitcoin bounced off of it heading into the new year and for much of the new year or for a part of the new year. And then as of recently, as we all know, Bitcoin ripped, and it's actually now above and testing this accumulate, as I put it in brackets, accumulate, like a little bit lighter green, yellowish green trend lined. And so, yeah, really interesting to see us hold above it. I won't be surprised if maybe we dip below it and then have to come back and then we solidify it as support. But, nonetheless, like taking a step back, like Bitcoin is doing what it always does. And so I think this is a good reminder, like, let's not get sucked into the 1 hour, the 1 day, the 7 week price action. Like, focus on the bigger picture, longer term, and the longer term trends. History says that the Bitcoin is doing exactly what it's done in the past, so nothing to freak out about. That said too, this is one of my favorite charts. I don't know if I hit on it last week, but this is one I continue to look at. This is the Bitcoin 1 year hodl wave. So the pink line reflects what percentage of Bitcoin's circulating supply hasn't been moved in at least a year. A good chunk of these coins are lost forever, so that will forever be baked into this. But of course, like the more that we see this percentage supply of Bitcoin that hasn't moved in at least a year, um, two things. One, it lends us some insight as to like what is overall sentiment of the market, and it's you know one what I'm digesting from here is that sellers are exhausted. Those who are going to sell, probably have already. Those who are in it for the long haul are still holding. So that's one thing that it's telling me. And then two, it's telling me, just inherently there's the fact that people aren't selling is eventually coupled with the halving could result to a supply shock where just there isn't a lot of readily available supply in the market, and that translates into price just shooting up at some point, like new demand coming through and it weighing materially on price, and with that um, some nice price action to the upside. But yeah, we're currently at 67% of all Bitcoin in circulation hasn't moved in at least a year. Um, Crazy. And historically, what we've seen is this number just continue to trend higher as Bitcoin starts to confirm to the market that the previous bear market bottom is in and things are looking a little bit more favorable to the upside. What I will say is, and can you guys actually see my cursor by chance?
No, I cannot at least.
Okay. Well, if you look back to 2016, it's kind of in the middle of the chart. I should have done this, but kind of like a tall tale sign of where it makes sense to maybe start thinking about taking some profit. And we didn't see it so much last cycle, but once we do start to see a lot of Bitcoin like move, and the hodl wave trend lower as price is going higher, that's typically like a good sign that there is people who are starting to take some off the table, and maybe you use that as like kind of a sign that the top is coming in the next 3 to 6 months. If you had done that in the past few cycles, you would have exited really, really nicely. So, yeah, right now this chart is looking bullish. We'll have to continue. I'm going to keeping like a close eye on this thing all the way throughout the bull market, and we'll use it as kind of like an indicator maybe for when it's time to take some off the table. We were talking about this actually before this kicked off, and it's funny. We're starting to see this right now in the market with Bitcoin pushing past 25K. The options market is actually pricing in a big move as of this morning. So I'll try and explain this in very simple terms, but basically all these lines reflect the implied volatility. So what these these options contracts are implying in terms of Bitcoin's volatility. It reflects that, but all for different maturities, so or durations. So the white line is the 1 week option, the pink line is the 1 month, the purple is the 3 month, the 6 month is the blue line. And so, usually the way it works is that the longer dated ones have higher implied volatility, which would make sense. It's basically pricing for a larger window, and of course, the bigger your window, the greater the probability of your volatility being higher than a shorter window. But in this case, what we've seen is the 1 week that white line punched through all of the longer dated ones. So basically, the market is saying like, I want to own a lot of volatility, and that particular contract is saying that it's pricing in the expectation of there being higher volatility in the near term. So this isn't a perfect indicator. No indicator is, but it is really interesting. To see some of the recent price action, and then suddenly this thing just popped this morning. So what I'm reading from this is the market is pricing in, yeah, some volatility in the very near term in the next week or so. Which direction we don't really know, but my guess would be all things considered, there's a little bit of a bias to the upside. That said, this is my last slide before we hand it over. Talking about volatility is what we'll see here is white line is price of Bitcoin, and then the pink line is Bitcoin's 30-day moving average of its annualized volatility. And so if we look at kind of like this yellow square box that I've drawn, we can see that anytime Bitcoin kind of gets down into this range, there's usually like volatility is so low that eventually, of course, it has to mean revert higher. And so, yeah, what we're actually seeing over the past few days is the 30-day moving average of annualized volatility start to break out of this historical low range. Doesn't necessarily mean that it has to go higher. Of course, it can just go up really quick and then come back down in. But, nonetheless, like you couple this along with the fact that volatility has just been trending so low for the past year. What this says to me is like what's on the potentially on the horizon is Bitcoin rallying further and us definitely like seeing volatility to the upside and just the market starting to rebound like even more so than it already has. I know some people have like said like Bitcoin's up like 60% in the past like month or 6 weeks. And like, yeah, Bitcoin and a lot of crypto has moved, but like also don't forget that this is crypto and don't let the bear market have completely made you lose respect and insight or at least remembrance that the Bitcoin, like once it wants to run and once crypto wants to run, like it really does run and it can keep running. Um, so yeah, all in all, things are starting to look really, really interesting here. I'm feeling bullish, leaning still bullish. Wouldn't be surprised if things do cool for like another few months, but I also wouldn't be surprised if things run for another few months. But nonetheless, I think the year could still be pretty favorable. I'm expecting 2024 to be much more bullish, but 2023 could be a good year nonetheless. That's it from me. I don't know. Does anyone have any questions or any slide you guys want me to go back to? This is of course going to be recorded, so you can check it at a later date, but happy to answer any questions.
Yeah, I guess I got one question. Going back to the like real estate slide, I think it was like the CPI print. Like what, I guess like what percentage of, for example, you said housing is one, and then you got like food, for example, and I'm sure there's plenty others. Like, is there some type of, I guess, percentage like allocated to these? Or are they kind of just joined in together like in a basket? Like, how do they calculate that? I guess.
Yeah, it's an excellent question. And it's I think the answer or the question kind of epitomizes like the flaw of or just the bullshit, for lack of a better term, of like the Fed, the inflation data, economic data in general. So the answer is that the index, you know what the components are, you have no idea what the weightings are, you have no idea how it's calculated. They don't disclose that publicly. What you can see is kind of like a month over month or like a year over year kind of like trends. So you can get a sense for when like housing has gotten really expensive, but to know like how much of the monthly index that's like it's attributed to, they don't disclose that.
Got it. Okay.
And the other thing that's fucked up about it is, the way that they come up with like the housing inflation component is it's called homeowners equivalent rent, where they do a poll and basically say like, go to the homeowner and they say, hey, like if you were to put your home or your condo, your apartment, like on the market for rent, what would you charge? And typically they do a really bad job of reflecting like the true market price because it's like you're a homeowner, you don't really know what the rental market is, and so typically it's a bit higher than what is like actual market, and of course too, it takes time for that number to come down as the things like just the rest of the economy kind of digest changes in the market and whatnot. So the index is a little fugazi kind of construction, and then of course like there's just like flaws in the actual kind of way that they go about measuring each one of these individual components. Not always, but at least most certainly on the real estate side of things.
Right. And then like when when CPI is about to come out or whatever, there's like expectations. That's just kind of calculating. It's obviously like, if they gave us the formula, we'd be able to figure it all out. But it's kind of just people like coming together and be like, okay, this is what we're expecting, and then depending on, it's kind of crazy how things move off of what's expected and not like just the raw data itself. It's like, okay, this is priced in and it comes higher. We're gonna dump, or it comes lower and we're gonna pump. Like it's kind of interesting to me. So
Yeah, well, and that's because, the market is, they say like the markets are efficient, right? Like the markets are this culmination of people reflecting their opinion with how they buy and sell. And so, um, like, if there's a certain level of expectation, if the market's expecting, economic data to be this or this to happen, like it'll price it in. It'll discount all public information and bring it to present day. So yeah, it's like the 6.4% is like, for inflation, that's really good compared to like 9% a year ago, right? But the market was expecting 6.2% and it was pricing in such a reading accordingly that when it isn't that, like it reprices accordingly. And that's why we saw, um, we've seen over the past few days, markets kind of come in a little bit, at least equity markets.
yeah, another like question. I guess this is kind of more towards like we can focus on this next market sync, but um, like the only time I've really looked at inflation, if I'm being honest, is in the last 2 years, um, or maybe even like a year. So I'm just like used to these high numbers, but like, what's it? I guess this is a difficult question because we're always going through cycles, but like, what is it usually sitting at? Like, I'm talking like regular, like no bull market, no bear market, just like I, I don't even know. Like, we're coming out of, for example, like, we're coming out of like a bull market or something. Like, what is inflation usually like sitting at compared to like now where it's sitting at like 6.4? Is that high for, like, I guess it's like a relative question, but it's like I don't really know anything to base it off, right? It's like 6.4. Okay, it was like 7 a couple months ago. Like, do we expect it to go down to a certain number and kind of like float around that, or?
Yeah, so the Fed has a mandate of, the Federal Reserve has two mandates. It's to manage inflation and unemployment, and they do both through interest rates and a few other things. But their mandate has always been like 2%. Like that's what their target rate has always been.
Okay.
Um, there's a lot of people saying they expect that to come up to 3% because we're kind of in this new era. There's just more money in the economic machine. That's TBD. But historically, like you definitely do get bouts of like pretty high inflation that like comes back in. I mean, not always, and it's usually like decades between. But for the past like few decades, it's been around 2%. I mean, that's why rates were so low for so long, is that they were really, really struggling to get to that 2% reading. And, like you and I have talked about, and maybe others don't know this, but, inflation is bad, but the only thing that's worse than inflation is deflation. Like your economy can just get to a point where prices just keep going lower and lower, and like, just not, businesses collapse and the consumer doesn't spend in the same way. And that isn't really tough to get out of. It's really, really bad. So, to be fair to the Fed, like, yeah, in retrospect, they held them for too low for too long. But like, also, to be fair, inflation was really low for quite some time. And, part of that too is, as we've talked about, Ekim, is technology is inherently deflationary. And we've gone through over the past couple of decades, like some of the biggest technological advancements ever that has greatly reduced the cost of producing things. People don't need to consume as much. The classic example is that, like, think about how much spending the average person was doing like 3 or 4 or 5 decades ago, as opposed to now. It's like, you can work from home, so you don't really need a car. You don't need to drive somewhere. If you do need to go somewhere, you can Uber. You can have food delivered to you. Food is like mass produced. Like, there are all these amazing technical innovations that have just reduced the cost of things and the need to spend. And so that's why inflation has been low. But yeah, let's see if we can get back to 2 or 3% like over the next 12 months. That would be nice.
Right. Yeah. And if we go like, I guess under that, that's considered deflation, where it's like
Yeah, I mean, if you go below zero, if it's negative, like
right.
yeah,
Like, is it okay? So like, if if we get down to like 1 or 2%, um, we won't see like I guess like how does the Fed manage like rate hikes through times where we're setting at like where they want us to be at, for example, 2%? Like, do they not just change the interest rates, or
they'll adjust them accordingly. Like, if you can if they can maintain a 2% inflation rate at like 5% Fed fund future or the Fed funds rate, then they'll like leave it. It's kind of like they'll just wait and see and alter accordingly.
okay,
Like if inflation does start to go below 2% though, that would be, a good excuse to cut rates because you want to start spurring economic growth. Because yeah, again, you don't want to hit a disinflation or a deflation period.
got it. Okay, cool. So, thanks for that. Appreciate
Yeah,
it.
of course. Inflation's weird. Fed interest rates are weird. But yeah, definitely an important game to understand, in my opinion, at
Right.
least for risk assets.
Yeah, I gotta look into some of like the historical data for some stuff because I'm really not like too knowledgeable on stuff past my I guess my investing career. Like, it's only a couple years long, so I don't really know like how
Oh
things were,
yeah,
a
of
couple
course.
years ago, dude. So
Yeah,
um
and most people, not only do most people not understand that the calculation for inflation isn't publicly released, but like people don't know that that actual methodology's changed several times over the years. Um, and a lot of people will say like, yeah, well, inflation has been 0%. It doesn't correctly account for some of the biggest increases in expenses, namely education, right? Medical, housing. So it's all bullshit in my opinion. But again, like if you want to play the game, like we just have to be following the data and what the market thinks. So that's why I care about it. I try not to get my own personal views involved.
yeah, got you. Cool. Um I can stream. I don't really have much, but I have a couple of like tabs open I can run through if you want.
Yeah,
Yo,
if
can
you
I
got
ask
some
a question
charts,
quick?
What's
yeah,
up?
go for it. What's up, DJen?
What's up? GS, long time no see. How you been, man?
Good, dude.
Yo, DJ, what's going on, man? Been a minute.
Hey, what's up, Swick? How you doing?
Good, man. Same shit. Talking about the market.
I love it. I love it. I kind of tuned in a little late. I just saw GSS's tweet about an hour ago, and I was like, oh shit, I need to hop in, see what these guys are talking about.
Dude, we gotta get
Um,
you up here, man.
what's up?
We gotta get you up here.
Dude, I'm down. I'm just kind of looking. I got smoked trading the 5 minute just a little bit ago, so I'm not doing that again. But yeah, I mean, what's everyone's overall thoughts? I kind of hopped in a little late, when it comes to like JP and the interest rate hikes and the markets right now.
I don't honestly, I'm just kind of like a watcher here. Like, I kind of bought a little lower, so I'm not really like buying much up here, in
Sure.
terms of like altcoins, because I'm kind of like, dude, I'm like, I don't know. I'm in this point where it's like, dude, we just got slapped for the last year, and I'm just like, I've been trying to accumulate at the low levels, and like I've kind of grabbed a little bit of a bag, but I'm sitting out because I'm kind of pissed off that I didn't grab more. Um, yeah, but I'm not like a trader or anything. I'm kind of just like learning the game as I go through. So
Yeah, I guess to quickly recap, kind of what I was saying was, Fed fund futures market's now pricing in 3 rate hikes, given the latest CPI and I think even retail sales data. So pricing in 3 more rate hikes, $25, 25 basis points a piece, one cut in December. I think a lot of that has obviously been driven by the CPI print coming in higher than expected this week. So like, I don't know, my personal take is that that's kind of like base case. I think like a better case scenario, or like a bull case scenario, is that subsequent inflation readings come in better than were expected, and it just sequentially continues to trend lower. We were talking about this just a little bit ago, but like the biggest explainer for the jump in inflation, this most recent print, was housing. Housing made up the lion's share, and housing is also the component of inflation that is the biggest laggard. I mean, it takes just like months, if not quarters, for mortgages to adjust according to rates, to then sellers to get shut down, to more property coming on the rental market, to then that translating to homeowners equivalent rent coming down. And that's why I pulled up the Zillow like housing index, is because it's just only started to roll over. And it seems like it's like almost like a 6 to 12 month like kind of lag. So my view is that like the market is starting to look a little bit bearish in the short term, but I do think that over the next few quarters there will be more surprises for inflation, and it'll still end up being like a relatively decent year, especially if like corporate earnings can hold up, which they seem to be doing like decently well. But of course, like this has been the fastest rate hike in history, and so I'm sure that there's other things that could start to break over the next few months, and maybe that does throw things off a bit.
Yeah, I'm not second guessing my bearish bias that I've had, since last summer, but it's definitely hard to argue all the data that you just shared. But it's weird to me. I mean, even on Monday, pre-CPI, I was like spamming Twitter, just super interested as to why everything, like most alts, total 2, total 3, Bitcoin, were sitting at support, and I was genuinely convinced that CPI was going to come in lower. And I had some long positions on some alts that I was looking at, and I woke up the next morning. Unfortunately, I got stopped out in profit, and I didn't get back in. But alts rallied on 6.4%, even though it was above expected. Which I guess is, technically it's bad news. I mean, I'm pretty new to the macro game. I've only been like studying it for probably like since last summer. But I mean, with JP being as as strict on his he wants 2% narrative, inflation, I'm just a little shocked, really, that Bitcoin's rallying like this. Equities seem to be doing pretty well right now, especially on the year open. But I'm also a little hesitant to buy spot around. I mean, I'm not going to buy spot here at these levels, but it just seems a bit weird because I don't think we've experienced the true pain of the bear market. This seems like a one last leg up kind of thing before we actually experience like the boring part.
So do you think, are you expecting like new lows?
I don't know if I'm expecting new lows, but unless we get like a significant break above 25.5 for Bitcoin, and we hold that as support, I could see us revisiting the range low at like 17.8, because we had a deviation at 15.4. So I mean, I can show my charts real quick.
Dude, I'd love that. This is nothing compared to yours, bro.
No,
I am nothing compared to you.
Oh, I didn't even know you were
dramatic.
I didn't even know you were streaming, bro. My bad.
No, I mean, I agree with you. Maybe not necessarily in terms of like price action, but it's something that like GSS and I talk about quite a bit. Where it's like, I almost want to say the worst part about the bear market that I think we still have to look forward to for like 2023, 2024 is what you said, like the boring chop. Like that's where it's like, it's almost not even getting financially wrecked. You just like mentally get wrecked, and you have to like make a decision with yourself that like you want to stick it out. When like, even if we just see what like I feel like we've been seeing for like the past week, where it's like you rip up, you feel great, and then it all gets wiped away, and you're right back where you started. Like an extreme case of that I've been following is like Canto as of late, where it's like, you buy in at like 30, you rip up to 50, you feel awesome, then you rip like right back down to 30. Then you're like, oh my God, this sucks. Then a week goes by, you're back at 50, you're back at 30, and you're just like chopping. And I feel like we're gonna have to like mentally deal with that for the next year or so. And it's like, I don't know if people are really prepped for like the mental toll that takes.
Right, and I'm right there with you, man. I mean, and the range itself could literally be, and forget how to, so I can share my screen. Oh, share my screen. Here we go. Like the accumulation range could literally be what I'm looking at right here. Let me just delete this. Like we could literally just maybe dick around here until, you know, shit really pops off. This is a terrible line. That's not what I'm expecting, but that's kind of the idea. What has me a little confused with the strength of this 3-day candle, and I can zoom into like the 12 and the 4-hour here in a second, is the fact when I pull out a volume profile, this lack of volume is concerning if you're a bear. Because you could try to play the deviation on a lower time frame, but normally when you see this lack of volume, this imbalance right here will normally get filled in at some point if, you know, there's enough push to the upside. Now, when I go to like the 12-hour, I mean, this was earlier this week, right? We were playing this range for what, from the 20th to basically the 7th, right? Pretty easy chop. I would take this range high right here. Oops. And once we lost the range, people were like, oh, let's just pile in short. Well, another deviation. And we're at the mid-range too. So whoever did that got wrecked. And now this honestly just seems like a liquidity hunt for these highs up here. What I prefer to see for Bitcoin, assuming that, you know, these highs are important enough to, you know, to take out whoever shorted up here. Hopefully they close down here, but if not, I would love to see something like this where we come up, come back in, nail it, and then we come back to the mid-range, potentially the range low. And that could be where we just kind of sit for this year, because then this would look like a proper accumulation versus, like if, let me look at Bitcoin and Binance. I have more data. So don't mind my charts here or my drawings. I was fucking around last night. This to me seems more like an accumulation phase. Very boring, right? 2017, 2018, 2019. We had relatively, what's the number here? We had 126 days of basically chop. Granted, I mean, if you zoom in, this range was pretty decent sized. You know, it was a 36% range, give or take, that we were just kind of sitting in. I mean, if you're sitting in this for 126 days, man, that's boring as hell, right? Nothing happens. We had our aggressive move up, weak candle, nothing really happened. Dump, bears get excited, and now we just sit, right? Slowly grind up, and then 2019, we break out of the range, and that's your cup bottom. And then, you know, then you come back up here, and you get wrecked, 2020, COVID, and then now the bull market commences. So this could be our cup bottom potentially. You know, now if I'm for anyone who believes in like fractal theory, you know, this looks pretty similar. Maybe we do come up, and then you mount 25K eventually as the actual bottom deep into 2023, early or late 2023, and come back up, and then bull market commences, you know, in going into 2024. But I guess keeping macro into play too, it really just depends on how JP comes out. Historically speaking, whenever he does turn dovish, it takes about 6 to 8 months for the markets to bottom. So that alone has me genuinely concerned for Bitcoin. Now, I'm a little salty because I wasn't really doing a good job at accumulating my spot bags down in the lows, just because I was skeptical. But, you know, it is what it is. Trading's difficult. I'm not perfect, but yeah, those are kind of my thoughts right now. And I can look at like SPX too. This is kind of the range that I'm eyeing on. 3-day. It kind of reminds me a little bit of total 2, total 3. There's this like key area where we had 2 highs touch. Wouldn't be surprised if this gap fills right here. I mean, we've gotten consistent higher highs, higher lows, so market structure's intact. Now, I would love to see this happen, something like this, and then we break trend, and then maybe go down, take this high out, range high, everyone's bullish as hell, maybe even fill in this 3-day order block, and a little bit, and then kind of chop, because this right now doesn't look anything other than like a range. I wouldn't be calling for new highs just yet, but yeah, that's kind of how I'm seeing equities or S&P 500 right now.
I got I got a quick question on Bitcoin for you.
Yeah, man.
If we go back to like the Binance chart that you just pulled up,
Yeah,
uh,
let me pull it up.
that's one that I've been like looking at as well. Not with like much charting, but just like actually looking at the candles itself.
Mhm.
We go back to 2017 when we hit like the bottom. I think we got like a little bit of a double bottom with the COVID thing, but I kind of take that out as like a black swan. But when we
I
hit
mean,
up at that bottom,
totally.
yeah, right. We got like below that line there. Do you think like I guess this rally could be anything similar to like something like April through July in 2019?
It could, dude. It
Yeah,
could. It could
I mean, like,
totally.
I'm like kind of trying to take my emotions out of it as much as I kind of want to accumulate more like lower. It's kind of like scaring me how like well Bitcoin's performing.
Mhm.
And like as much as I want it to get kind of like double bottom, similar to like how we hit the bottom low in 2020 with the COVID crash. I don't see like a crazy black swan hitting again. Obviously, no one knows, and that's just like I have no data to back that up. It's just like me guessing, but it's just kind of interesting to see like maybe we see like a relief rally similar to like start of 2019, and then we can start of 2023. I don't know if you got any thoughts or like whatever, but I'm just curious.
No, I mean, something like that could definitely happen. Where, honestly, it'd be kind of scary. Because I'd be mad as hell because I haven't
Right.
accumulated like I want to do.
Of course. Same.
But I mean, if 2019, if that were to play out, I could see this.
Yeah, I think
that.
that's like the biggest risk right now. And I actually think, like, if I were to summarize 2023, it's going to be a year of whipsaw, kind of like 2019, where people they're feeling like FOMO. Things have just run up. They're like, they're refusing to accept that it could keep going higher, or there's this on the horizon, and then it keeps going higher, and then they get forced into buying, and it obviously pushes things up higher too. And then there's kind of like a micro bubble, and things correct, and then you're like in a weird spot. So like, I don't know. My personal take is that the most cataclysmic events just happened last year, and the bottom is in. We could obviously go lower, but I think that you're not going to set a new low. It's really interesting to see the market digest this SEC, BUSD stablecoin stuff and not completely nuke. I mean, think of like 6 months ago, if that came out, like the market would be freaking out. I think sentiment is like, people do, or like they're standing around and just saying like, shit, like, should I be buying here? Or I didn't accumulate, like, should I just ape in? And so, and between, couple that with the fact that I think the Fed is pretty close to being done, and they think they are too. And, maybe equities do correct, but like, mind you, crypto has also had its correction. It's taken its 80 to 95% down draw, like across the vast majority of alts. So it's kind of like, I don't know. I agree with you, DGen, where it's like we could certainly be a year of range bound trading, but at the same time too, like, that does mean that there could be this kind of micro bubble. And I think just being cognizant of both scenarios will bode well for you. Not you specifically, but just anyone in general. Because, yeah, I think the last thing that you want is to refuse to be buying in here, just expecting things to go lower, and then it, of course, doesn't, and it rips higher, and then you're buying it at a later date, and then it does correct meaningfully, and you just got whipsawed to shit. I mean, it happened to so many people, like in 2019. I've experienced it, and it's just like, mentally, it's the most frustrating and draining thing out there.
Yeah, I totally agree. I mean, I guess for me personally, I'm kind of just waiting for the money printer to start going burr. I kind of want to get into that environment again where liquidity is just easy. Which is kind of why I'm sitting on my hands. And don't get me wrong, it's extremely difficult watching price action go up and getting FOMO. I mean, I'm genuinely happy that Samo hasn't been ripping because I have more time to accumulate that guy. But because I think that'll perform really well over the bull market. But yeah, it's weird, man. I mean, even just by eyeballing, if I go back to the Bitcoin chart that I just drew out, like if something like this were to happen, it could make a lot of sense. Not a lot of volume, right? I mean, since range expansion, let's go back to like this point right here. not a lot of volume between 25K and 26.8, right? So if we were to come up, we would fill this in extremely fast. We could range here between these two, this range low, range high for a little bit. Boom, come up here, fill in this inefficiency, key support, and fill in take out these levels of liquidity, and that's your local high or that's your range high for 40K, and that could happen in May, I guess, based off of my little squiggle here. But the bullish case makes a lot of sense, and we have a ton of fucking volume right here in this area as well. Value area high here as well, so that could be a key high to watch out for at 33K. I'm a little hesitant to watch or call that out because there's a day and 8 hours left in this candle. This could easily close lower. If we zoom into the daily, this thing could easily just roll over as well. Classic range deviation kind of situation that I had drawn out on this right here. So both scenarios are definitely possible. I think the safest play, if you're going to try to fade this move, it's going to happen soon. Probably within the next 4 candles here, you'll know for sure. You see anything like this where we get a 4-hour candle close below this range high, it's probably going to come back, or at least come back to this level right here. Whoops, that's not a straight line. Come back to here. So, and you short this, could come back, and now we rally, and then the Binance chart example or situation that I was showing you guys comes into play, or we turns out this is just a whole liquidity grab. We're still in a fucking range, and then we just come back to the mid, and then we get that year-long chop of boringness, and everyone's done with the market, and you question your fucking integrity for playing this market at all. But I don't know.
Another question for you. I guess this doesn't really relate to charts as much, but looking at some the next halving, right?
Yeah.
I think we're expecting sometime 2024. And when I was looking through, for example, last 2 bull market and bear markets, entering in and out of them, I was kind of looking at obviously like you said, and I've said this before we entered in January, but I really expected 2023 to kind of be just a range bound year where we don't see too much volatility, and we kind of just chop around you've honestly went through with these little ranges you drew. But what do you think about heading into the halving? Do you are you expecting to be really bullish by 2024? What do you 2025? What are your time frames, I guess?
So I really got into Bitcoin around the halving in 2023, or I'm sorry, 2020, May 2020. Just so I got super bullish when I learned about it, and I genuinely think that narrative has the potential to make Bitcoin rally similarly to how it did in the previous halving cycles. The idea that I've been playing around with a lot, has been, 2024, we also have a new president coming into play. If and when that president happens to be conservative, markets will probably rally. Again, this is just a hunch, speculation, I have no idea. So then, with the halving, with a new president, potentially conservative, and maybe, the Fed is now done hiking interest rates, we're in a more friendly macro environment, the money printer going burr, something might have broken, maybe not, then yeah, sure, the halving's going to make Bitcoin rally and we'll see new highs in my head. I also heard somebody say, I forget who, some guy on YouTube that I follow, he was making an argument for Bitcoin not seeing a new all-time high in the next cycle. So I don't really know how I feel about that. I kind of forget why he was saying that. I think it has something to do with if this recessionary environment that we're kind of walking into, regardless of what the chart says.